Very important numbers in terms of their cloud revenue, $32.91 billion. Estimates were calling for $32.39, so another beat there. Azure and other cloud revenue, FFX, that's up 38%, right in line with the estimates here. So they are posting beats across the board. They also crossed the $50 billion mark for cloud revenue this quarter for the first time. These numbers coming across, and as we're looking at the move is to the downside. We're down about 4% right now. I want to bring Kevin back into the conversation here as these numbers just coming across. But KG, as you're taking a look here, you know, we're seeing a downward movement, but we are seeing some positive numbers and some inline numbers. You know, what's your takeaway?
I think the Azure number, for the most part, actually came in line with the street's expectations. I think that might have been a little bit of the surprise. I think we have heard a lot about this demand kind of spiking to the upside when it comes to these data centers and utilizing these cloud platforms. But coming in line with the street's expectations may have kind of missed the mark when you're looking at the Whisper number. I think that might be a little bit of a cause for concern. And once again, we're seeing it kind of pull back in this market. Outside of that, the metrics were actually pretty decent. I think the guidance is going to be very interesting. Microsoft does not provide guidance within the earnings release. We'll get really those ranges, the detailed ranges on the conference call. So this could be a name that does reverse if we get maybe some good and optimistic tones from their executive team. But I think just meeting the Azure mark might have been a miss when you're kind of looking at the Whisper and the street's expectations.
And Sam, coming to you here, you know, we're now down 7% in the wake of this report. The only thing that we could even point to perhaps is that Azure number coming in line. As far as conversations that you had, you know, what were the analysts looking for, notes that you came across? What do you think will be most asked on the call?
Well, I think I would echo what KG said. Perhaps that's the sticking point here, because you had Ives, for instance, which we know likes this name, saying that they believe the street continues to underestimate the Azure growth story. So just coming in line, perhaps maybe it's not enough as far as the street was expecting, or at least some of the analysts were expecting. But as far as my conversations went, Marley, look, it was all about things that began with the letter C: cloud, capex, cost controls, capacity constraints, circularity of financing. I think these are all going to be the questions on the call. As KG pointed out there, a lot, it's going to be the focus on the guidance here. But then obviously, what are they going to say around some of the energy constraints? Because, of course, we do know that they are building out as far as some of their cloud capacity or the data centers. That's going to be no doubt a big focus. They've been, you know, obviously coming out with these special purpose chips as well. They do pay for the capacity from CoreWeave and Nebius. So, you know, what are some of the questions around some of the demand they're seeing there as well? So I think, you know, these are all going to be a lot of the questions on the call. I don't think these numbers, as you say, with a beat across the board is going to raise any eyebrows with respect to, you know, obviously the cost controls and some of the capex, but, you know, what is the market going to ask now about some of these eye-watering numbers as far as, you know, the return on an investment and, you know, what they're getting out of this, you know, with the whole narrative we're seeing in the market of, you know, showing me proof of all this spend now. I think that might be a question too.
All right, Sam, you want some eye-watering numbers. I'm going to move over to Meta here, and I'm just going to start with the capex number, $115 billion to $135 billion for 2026. Estimates were calling for that to be just north of 110. So that was even lower than the entirety of the range. We are seeing them move lower, about 2%. Let's take a look at the fourth quarter specifically as we take a look at their EPS coming in at $8.88. That was versus $8.02 year over year. Expectations were for $8.21. So they do have a beat there. Their revenue coming in at 59.89, beating expectations for 58.42. Ad revenue, very important here for Meta, 58.14 billion, better than expectations, 56.79. Their operating income growing almost 6% year over year to 24.75 billion. Their Reality Labs revenue, 955 million. That is slightly lower than expectations there. Family of apps operating income, 30.77 billion, slightly better than expected there. Their revenue also slightly better than expected for the family of apps, 58.94. And their Reality Labs took an operating operating loss, $6.08 billion. Estimate was calling for that to be 5.8. But that capex number is huge, even bigger than was anticipated with the knowledge we had going in, saying that we knew it was going to rise, and it still exceeded expectations there. KG, what are your thoughts here on seeing just how astronomical that number is?
Yeah, this is including the finance leases, and that's also something that we could talk about when it comes to Microsoft, which is probably why we are seeing the move to the downside. They are ramping up their capex spend fairly aggressively here, but you're starting to see these unique structures when it comes to the capital expenditures or the infrastructure that they are putting into place, and maybe the upfront cost is a little bit more of a sticker shock for the market. That being said, and we are starting to see it reverse here, Meta's numbers actually look really good if you're kind of excluding the capex spend. I mean, the revenue guidance, as well as the revenue number that was reported, solidly beating the street's expectations. They are obviously monetizing their business. Advertising continues to be fairly strong. The conference call is going to be key. You're going to ramp up capex spend moving forward. What are you going to spend it on, and when is going to be the time when you're going to see a rate of return on that investment? That is usually what they do not provide, and why we do see pullbacks in Meta, and it's because of the conference call. Hopefully this time around they're actually able to change that type of language or tone.
And Sam, KG brings up a good point there. Is there a learning opportunity here from last quarter when I think the street felt there were just too many unanswered questions about where that money was going and how it was going to become profitable? And we saw that huge move to the downside. Do you think Meta's learned their lesson this time and they'll have an explanation for where all of this money is earmarked for?
Yeah, it was a little bit of capex indigestion, wasn't it, Marley? So I think, the question this time around is how are they going to stack up a convincing argument here as to how this is all being spent? I think sort of KG alluded to that. I mean, this is really going to be a show me quarter as far as some of the analysts that I was talking to today. Perhaps the bar was a little bit lower because of what we saw last quarter with respect to the previous earnings season, but no doubt investors very much want to see the payoff here, and they need to justify all this spend. So it's really going to be about the commentary, because the story with Meta has been one that this AI journey has been very expensive. So we really want to see the payoff here. They want to see the ROI. Obviously, we've seen a dispersion amongst investors as to, different names, different reactions with respect to just chucking numbers out there. First, they seemed like they were okay. That's the street with Meta's number and the capex spend. Then they weren't. Obviously, we know that margin concern is something that's been a really big focus over at Meta as well, and the fact that there is this view out there that they don't have the spending discipline like the Microsofts, the Googles, and even the Amazons in that camp, if you will, have, but also with respect to some of the more advanced AI partnerships as well. So I heard some analysts talking about the fact that, with this AI story, it's really about showing how they're integrating AI into your Instagrams, your Facebooks, your WhatsApps, and then how lucrative that bespoke experience is then for some of this advertising, which is, of course, where they rely on a lot of that revenue. So this is, quote, a show me ads growth moment, and justifying the eye-watering capex spend was some of the commentary that I saw out today.
And as we look at Meta, just while you were talking, we did see a reversal. They're up about 3% right now on what KG said were arguably good numbers here. Want to move over to Tesla, also seeing a move to the upside here, almost 4%. Tesla reporting a beat on EPS. They're coming in at 50 cents, above the estimates for 45. Revenue was a slight miss, though, and down year over year, $24.9 billion. That's down 3% year over year, below the $25.11 billion estimates. Gross margins, though, came in above 20%. Significantly above the 17 that was expected, and up from 16.3 year over year. Operating income beat expectations as well, $1.41 billion, but is an 11% year over year decline. Free cash flow, $1.42 billion, did fall short of the $1.5 billion estimates and declined 30% year over year. But Tesla is saying it plans to ramp up 6 new production lines across products. The Cybercab, the Semi, and the Megapack 3 all remain on schedule for 2026. They also say that they're going to invest further in autonomous robots infrastructure and clean transport infrastructure. KG, we're seeing a good move to the upside here on a mixed report. What are your takeaways?
Marley, you just did a really good job with providing those numbers. If I had a piece of paper, I'd crumple it up and throw it out. This is the headline here. They're about to invest $2 billion to acquire shares of Series E preferred stock of XAI. And this is something that has been kind of on the radar here over the last year and a half, 2 years. Now, Elon has kind of, put this down, especially when Dan Ives kind of suggested this. I would believe it was kind of the middle of the year last year. But it seems like Tesla is trying to build up their investment in XAI. I think that's going to be a very key thing. Now, will we see a full merger or any type of acquisition? That remains to be seen. But it looks like the steps are being made in order to invest in that business. And I think that's where you're going to see that synergy. And then also is going to provide a little bit of the ability for Musk to actually hit some of these milestones long term when it comes to his contract. So I think that's actually the big headline mover is the investment in XAI. The other numbers, yes, it was a little bit mixed. The operating margins actually looks a little bit like it's improving. Obviously, we know those tax credits are rolling off, so you are seeing maybe some stabilization there. But I think it's the XAI portion that's really going to drive this home for a lot of investors that are really enthusiastic about this name and looking for the next 5 to 10 years what the future brings. Not so much selling vehicles at the moment.
Yeah, and they say they entered into this pact on January 16 for these $2 billion in shares of XAI, also saying that they're planning to double the size of on-site compute in Texas. So really making a move into this AI future, moving away from this EV story. Sam, what are some of your thoughts that we're seeing here as clearly the future and this pivotal year Elon Musk is hinting at, saying 2026 is a pivotal year, is going to be heavily tied to AI, and arguably we haven't seen mention of it yet, but a potential SpaceX IPO.
Yeah, I think obviously this is just confirmation once again of the direction that the company is heading in as we continue to debate, whether this is a car company, whether this is a tech company. I mean, most are leaning to the latter, obviously, given that a lot of the conviction around this particular name has been also around the robo-taxi future as well. I mean, as far as some of the commentary out today, Dan Ives, for instance, who also likes this name, talking about how the story going forward really is about the AI transformation. That's obviously being led by what we've seen here with this investment, but it's also being led by the autonomous and the robotics initiatives. And he's been arguing that obviously the major focus now for the conference call today is going to be about the fact that, there's going to be this debate from the bulls and the bears about how quickly the robo-taxi era will actually take shape over the coming year. And so hopefully we'll get some updates around the US, including the removal of the safety drivers and its fleet. And obviously we're seeing that the street seems to be at a crossroads as to how to look at this one right now, Marley.
Well, Kevin, we want to thank you for being with us to break down these Mag 7 earnings that we just got coming across. For Microsoft, we're down about 4.5%. For Meta, we've moved more than 4% higher. And for Tesla, they are up more than 3%. But I do want to bring Alex Coffey into the conversation, joining us here in our Chicago studio to take a look at two big non-Mag 7 names that are reporting right now. One of them, of course, being IBM. Welcome, Alex. We're trading up about 7%. So let's just walk through these IBM numbers before we get some takeaways here. Revenue coming in at $19.7 billion. That is better than the estimates calling for 19.2, also marking 12% year-over-year growth. In terms of their EPS coming in at $4.52, that's also above estimates for $4.28. Free cash flow topping $7.5 billion, 7.55. That exceeded estimates for 6.85. Shares are moving higher on these initial numbers. Now, taking a look at their software revenue, jumping 14% to $9.03 billion in Q4, better than expectations there. Generative AI book of business now stands at more than $12.5 billion. As far as their outlook for the year, revenue growth above 5%. That was compared to estimates calling for 4.12. And their free cash flow for the full fiscal year, they're increasing to about $1 billion year over year. So clearly the street likes this. We're up 7%. Alex, what are some of the things that stick out to you?
Well, I was going to channel my Kevin Green and say you could crumple all those numbers.
No, I can't keep crumpling up the numbers.
But you said the piece I was going to call out. It's that generative AI book of business now standing at over $12.5 billion. This was what the street wanted to see, wanted to get some clarity. The numbers are strong. Let's not discount 12% year-over-year revenue growth for IBM. This is a company that I don't know how many quarters in a row it was that it was missing and declining in revenue, but it was a lot. To see 12% revenue growth is impressive. Software outpacing that at 14%. Infrastructure revenue at 21%. Even if its financing arm grew 5.3%. So it kind of beats across the board of all of its major segments. You could argue maybe its consulting arm was a little bit weaker, but it still grew at 3.4%. You look at some of the commentary from the CEO. They enter 2026 with momentum and in a position of strength. These are just not words IBM was saying 4 or 5 years ago, let alone 10 years ago. So it's a different era for IBM, and it seems that they're taking advantage of the opportunities that this AI build out and these changing landscapes of artificial intelligence are presenting, and you got to tip your cap to them.
And you bring up a good point. We're getting these numbers, but so much of the story for this quarter, particularly this quarter that we've seen, is not necessarily tied to the numbers. It's tied to that one key headline, and I'm glad I grabbed it for you in that one. But, Sam, as we look at this AI book of business and IBM, not necessarily a part of some of the conversations we had about the importance of demonstrating your AI strategy going forward, clearly they got the message here in making sure that was included. It was highlighted, and it's moving to the upside. What were some of the notes that you read today, or some of the most important things you were looking out for?
Yeah, Alex, I feel like you missed a beat there when you said tip your cap. You tip your red hat with this one, I think. But yeah, I mean, a lot of expectations for artificial intelligence. That was very much the key theme that I was looking at as far as some of the expectations going into this. I mean, what were they going to say as far as, how that AI narrative, that story was going to stack up as far as convincing everybody out there, because really that's the way that things are going. And if you don't have, a convincing story that you have in the market right now, obviously we've seen some of these other companies being punished on that, but obviously we want to see a little bit more of an update on how they've been acquisitive as well, an update on Confluent. Investors likely want to see more updates and details about some of the purchases here, any future M&A strategies as well with respect to any further acquisitions, updates on the software business too. Obviously, we've seen software's been having a pretty tough time throughout the course of the last year or so, but then also just largely around the integration of these businesses and more plans for the future. But yeah, I think overall that seems to be the headline that's catching a lot of attention, why we've seen this upside right now.
And Sam, I do have some updates as I'm reading through the report here. Software for them actually did very well, up 14% to more than $9 billion. But that Confluent acquisition, they are commenting that $11 billion acquisition expected to be completed by the end of June. And they do anticipate that to continue to boost that software business, the growth they're already seeing. Also approving a $1.68 dividend. So that marks 110 years of consecutive quarterly dividend, according to
consistency.
Consistency matters, I guess. And also, here's something that likely there will be questions about. IBM's tax dispute with the IRS is being escalated. They're saying the potential exposure swelling towards $8 billion. So, Alex, as we get deeper into this report and we get some of that commentary there, with this Confluent acquisition, we take a look at that. We see that there's a potential IRS issue here with an $8 billion hit. How impactful might that be? How much of the focus of the call going to be on that?
I think there'll probably be some questions on it. I think that they're going to take the time, if you're a shrewd leadership team, which I do think that this current IBM team is. They're going to want to tell the stories that they want to tell. And right now that story is the AI book of business and the growth that they're seeing there. I think it's also that they're going to see potentially a full $1 billion increase in free cash flow this year, according to what their guidance suggests. And yeah, they've been out there buying different companies, Red Hat, of course, you mentioned software company, Confluent. That costs money. But if your businesses are also generating more free cash flow, you have the money to spend. So you combine that with the fact that they're one of the names right now that's actually monetizing AI. They're not one that is trying to, break through and be a research and development winner. So unlike, let's say, Meta platforms that you guys were just discussing, that's going to spend something like $125 billion in a single year, they're looking to make a modest, $12.5 billion over the next couple of years based off where the numbers suggest things are right now.
Yes, and being rewarded for it, up 10% right now for IBM. Alex, thanks for being with us to break down IBM. Lam Research not moving much right now, but I do just want to quickly give you these numbers. They did post a beat on the top and the bottom lines, coming in about 10 cents better than expected on EPS, slightly better than expected on revenue, also posting slightly better than expected outlook for the third quarter, but only trading about 0.2 higher on that report for Lam Research.